Good morning and welcome to the Killik and Co market update. Today is exactly 1 year since Russia's invasion of Ukraine, and clearly we've seen a lot of changes in the market since then, from the rise in inflation and interest rates to the relative strength in the oil sector, followed by the relative weakness of the tech sector after a decade of growth. One particular area of focus after the invasion was the European gas price. European gas prices went up due to a reduction in supply from Russia. Here we've got a 3-year chart for the European gas price, and you can see the spike in late 2021 as Russia started reducing supplies in the run-up to the invasion. There was then a spike in February 2022 when the invasion actually happened, followed by a continuous rise in the price as sanctions were imposed and supplies were further reduced. However, since then, the price has actually steadily come down, and this week the price came down to an 18-month low. And one reason for that is that we've had quite a warm winter, and that's actually reduced demand for gas. And another is that alternative fuels have been brought into play. For example, coal, which sadly is clearly very polluting for the environment, but also renewables. And it's certainly true that a lot of governments would like to increase their renewable capacity ahead of next winter when energy demand will be set to increase again. So please do give us a call to talk about our focus on renewables in a bit more detail. The direction of US interest rates always has a big impact on markets, so the minutes of the Federal Reserve meetings are always very closely analysed by investors. The latest ones were published this week, and we've got a few key comments that came out of these minutes. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. In support of these goals, the committee decided to raise the target range for interest rates to 4.5% to 4.75%. The committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. So markets reacted negatively to these comments about interest rates having to go up a bit more. Many had hoped that because inflation is starting to come down in the US, that would mean that the Federal Reserve would hit pause on raising interest rates further. The gold price also tends to be influenced by the expected direction of interest rates, as well as many other factors. Here's the gold price over the last 3 years. You can see the rise that we had in 2020, so gold is seen as a safe haven investment, and people tend to move into it when they're feeling scared, and they did move into it when they were worried about COVID. Gold also doesn't pay any income, so it looks relatively less attractive when interest rates are going up. And you can see that the price fell in 2022 when interest rates were rising quite sharply. It then rose when inflation started coming down and investors hoped for some relief on interest rates, but more recently you can see it has come down again, possibly reflecting an expectation that rates will rise a bit more. And in fact, the gold price has just hit a 6-week low. And finally, we've talked about semiconductors a few times in this video recently, and clearly there are many different types of semiconductors, some of which are only suitable for relatively simple processes and some that can handle more complex processes. For advances in technologies such as artificial intelligence, those more complex semiconductors are required. And we've seen quite a divergence recently in the performance of semiconductor companies making the complex semiconductors versus the shares of the ones who are making the more simple semiconductors. Here we've got a chart showing the prices of Intel versus NVIDIA over the last 2 years. Intel, which is shown by the pink line, has been steadily declining. The company has had some manufacturing problems and it's struggled to produce more complex products. And this week the company announced it was cutting its dividend. NVIDIA shares, on the other hand, have picked up recently, encouraged by comments from many tech CEOs about the growth potential of artificial intelligence. NVIDIA results were published this week and they were much better than expected. In fact, the shares went up by 14% on the day following the results. Moving on to have a look at next week, we're expecting to have results out from Salesforce, Costco and Universal Music. That's it from us. Enjoy the weekend and we'll see you next Friday.